Hello guys, how are you doing today? How are you coping with the stress of trading? I hope you are keeping up. I always advise traders not to give up because each day is a new day to learn something new and add to your arsenal. Okay, there is always need for you to come back to the chart to be able to frame a new thing out of the market and increase your chances of coming out with the next winning trade. So if you can see my screen right now, this is mostly like a backtesting session. So I am going to explain to you what this video is all about. On the Monday 22nd of January 2024, and this is more like an intraday order flow of the gold price action for this day. All right, this concept is originally taught by Michael J. Huddleston, which is the inventor of the ICT. Much regards to him. He has done a great job in the world of price action, and if you are interested in learning price action without indicators on your chart, then I think you should visit more of his YouTube videos often. Alright, so let's get into the video. Price is a function of time. You will learn that from Michael J. Huddleston. If you think that price is not influenced by time, then you should actually not be watching this video right now, because I want people that understand that price is a function of time first. I want those people that think in that way to continue to watch this video, because at the end of this video I am going to uncover a lot of things about daily order flow. Okay, so if you want to learn more of this video, you can watch the ICT mentorship episode 5 titled Intraday Order Flow and Understanding the Daily Range. Alright, but I would like to call this video how to frame your day, how to frame your day trading day. Alright, so the first thing you want to do is to develop a daily bias on your chart. First of all, you want to know where price action is going for the general day. Okay, if price has been trending bearish, you want to observe it on the daily time frame first to know whether price is eventually going to continue to the downside or reverse to the upside. Now we know that price is driven by two forces, that is the fair value gap and the liquidity on the top of all these wicks that you see here. That is basically the two things that draw price, fair value gap and liquidity. Alright, so assuming that you framed a bullish day from your daily time frame, that means you are expecting price to go higher. But first of all, you should know that price cannot go higher without sweeping the sell side liquidity first to trap traders that are wanting to go short, or long positions that put their stop loss on the downside, right? So you want to first of all take that liquidity before the overall trend begins. Now, if you come to understand that concept, you will know that it is safe to say that you have to always buy the sell stops and sell the buy stops. That is basically the logic that we are talking about right there. Okay, so if you want to trade for your day after framing your daily bias, that is determining whether the day will be bullish or bearish, the next thing that you do is that you have to drop to your 15 minutes time frame. All right, remember, this is not too much of a risk reward trade, but if you learn to do this properly, you can see yourself making more than this in a whole trading week. I mean, this is all you need to be a profitable trader. Trust me, if you are watching this right now, this is all you need to be a profitable trader. Okay, so on your 15 minutes time frame, you want to actually frame out the time of the day that is applied to price action trading. Okay, if you, as you know already, there is a morning session and there is a lunch session in which price does not really move, and the reason I marked it in red, it is because it is a no trading time, no trading period. You don't trade during the lunch time because of the low volatility. As you can see, price is not actually going anywhere. Okay, so, and the afternoon session. So the first step when you drop down to the 15 minutes time frame is to pick up the vertical line tool and go to the 8:30 time and drop it in there like I'm showing you here. This is 8:30. If you look at the black time on under the low of this liquidity candlestick, but then this will not work if you are not working with the New York time. Okay, because the New York time is the time that all algorithms work with. So you may want to drop down to this time zone, the lower right section of your trading view, and click on it like this and choose New York time as your time of trading right here. It is UTC -5 New York. Okay, before this strategy can work for you, you have to set your trading view time to New York time right here. Alright, so what next to do? Once you have changed your time to New York time, take the vertical tool and drop it on the 8:30 period right here. That is step number 1. And take it again and drop it on the 12 o'clock candlestick line, just like this. Alright, then you take it again and drop it on the 1 o'clock trading session. Okay, no trading session rather, and you pick your vertical line again and drop it in the afternoon trading session, that is by 4:30 p.m. right there. So what this will eventually do is to give you an equal frame of trading session from the morning to the lunch break and to the afternoon. Okay, that is basically how you come up with the framework of the sessions for the day. It is very important to do this because time price is a function of time. Now, after doing this, you look to your left, to the left side of your screen. Okay, once you have looked to the left side of your screen, you may want to select the lowest or the nearest or the first point of liquidity to the downside and to the upside. So as you can see, I chose this as my sell side liquidity right here, and the reason I did not choose this as my buy side liquidity is because it is still inside this price leg for this range right here. So I chose this as my sell side liquidity and I chose that as my buy side liquidity. Now what you have to do now is to wait until price takes out either the buy side liquidity or the sell side liquidity. Alright, so as you can see here, at around 9:30 a.m. price immediately came to clear this sell side liquidity, and I remember, as I told you, that you buy the sell side. Alright, that is where you buy right here. So this would have been a high risk entry, or let me say an aggressive entry right here if you wanted to buy this low right here. Okay, but conservatively, there is no need to rush into the market. At least you want the market to show you its hands before you enter the market. That is what basically most of the traders do. So if you are an aggressive trader, you may want to be entering right here for a buy trade, and on bearish days you may want to be entering on this buy side liquidity for a short intraday trade. Okay, so far so good. This is our 15 minutes time frame work. Once price has taken down this liquidity, you may want to drop down one time frame down to the 5 minutes time frame. The reason you are dropping to the 5 minutes time frame is to recognize or to find the fair value gaps that must have been created within this range when price immediately busted up after clearing this sell side liquidity. So let us drop to the 5 minutes time frame. So here on the 5 minutes time frame, this is what we have for that same day price action. Now, once this has happened and price have not yet returned to this level of demand or orders sitting in the market, what you have to actually do is to wait, because you don't buy in this zone because it is in the premium level of this price range. Okay, so this is not a good place to buy. You have to wait for price to return to the discount level. Now, how do you know that? How do you know where the discount zone is? You can simply do that by drawing out your Fibonacci retracement tool and marking this high to this low. Okay, so this is actually the 50% level for this price leg. So anything above the 50% is the premium area, and anything below the 50 discount is the discount area. So you are actually waiting for price to return to this discount level before you can enter for a buy trade, right? So for a buy signal, the lower it gets to the discount level, the better your trade is. Okay, so right here, as you can see, price actually did not return to the discount level properly until the afternoon session at around 2:30 p.m. So that is where patience will pay you, because you don't want to enter the market when it was consolidating. It can lead to a whole lot of bad decisions, because if you look at this level, price was consolidating more of right here. So once you have waited enough, you can actually wait until you see a sharp displacement to the downside. I mean, there are many ways to have entered this trade. I myself would have wanted to enter on this week right here. Once price swept that liquidity, I would have entered there for an aggressive entry. But alternatively, I would enter once I see something like this, because price continuously wants to tell us that I am ready to sweep the downside to go up. Whenever price shows you this downside, this sell side liquidity being swept, it can print another leg for you to give you another opportunity and another opportunity and another opportunity. It depends on your ability to read price and understand price. Then this will not be difficult for you. Okay, for example, I can use my trend line tool, and once I mark out this level, okay, once I mark out this level, you will see that price actually swept this liquidity. You want to see this kind of sharp displacement, bearish candle close. You want to be seeing this kind of price action when you want to enter for a buy trade. Okay, so you could have been a buyer right here when price swept that low. You could have been a buyer right on this week when price swept this week. So there are many ways you would have entered. You would have been a buyer when price formed this huge displacement down, because as you can see, once price swept this level, this low right here, it did not come back until it hit this buy side liquidity up here. So this framework for your intraday trade is what you actually need to be profitable, if you understand how price works with time. Okay, so you don't need to be selfish or greedy about what you are framing. What you need to do is to make your trading decisions ahead of time. This happens like every day. Some days you may see price sweep the sell side liquidity and go up to sweep the buy side and continue to the sell side liquidity. Some days you will see price sweep the sell side liquidity and continue trading up for days. Some days you will see price sweep the buy side liquidity and continue going down and clear this there and sell side liquidity and continue to trend down. Okay, well, what really matters is not what price has been doing. It is what you mark out for your trading day range that will determine if your trade is going to be a success. Now, I have backtested this strategy on crypto. I've backtested it in the futures market, and I've backtested it in the forex market, and each single day this works. Okay, go and test it. Go and do the assignment. Go and do the hard work. Go and find out if this video, this educative content is worth listening to up to this moment. Go to your charts and check it, then come back and say yes, that this strategy actually works. Once you have known how to frame this out, it is just simple logic and price trying to repeat the same thing all over again. And when Michael Hudson thought this was 2022, but I saw my chart playing this exact pattern in 2024, and now I just pulled out the gold chart and I repeated the same thing and decided to make a video of it. Okay, so I will just drop down to another chart, maybe a forex or crypto pair, to show you exactly what price did like this before I end this video. So I'm going to pull up a forex or crypto pair just to prove that this actually works. This is actually a more complex price action from Ethereum USDT, but as you can see, the market was not really fluid or volatile for this price range, but price still repeated the same signature over for this price range of Ethereum. Okay, so let us quickly dissect what price did from the first day until the day we have a very nice entry right here. So first of all, it was 8:30 in the morning. It was 8:30 in the morning right here. Okay, so the first question to ask yourself is, where is the sell side liquidity? The last sell side liquidity is right on this week. Okay, now the buy side liquidity for this price leg is actually up here, and seeing this gap is a kind of a conviction for me, because we know that price will eventually move to fill out these gaps once it has swept a sell side liquidity. So what I will have to do is to mark my 8:30, mark my 12 o'clock, my 1 p.m. no trading session, and my 4:30 afternoon session end. Okay, once I have marked this out, I go back to check where my sell side liquidity is, and it is right here. Now observe how price swept this sell side liquidity and use this order block to support price. Okay, and once price did this, it gave us a signature in the market that bulls are in the market right here. So you want to be buying from this order block because you have confirmed that price swept this sell side liquidity and gave you this displacement in time. All right, so this is where your patience comes into play, because waiting for price action to fill in your gap from Tuesday to Thursday is actually a rough thing to do. It can test your patience really well. Okay, but that is why I say that price action is a function of time. It is a function of patience. Okay, so once price printed this out, you can see that it was not until Wednesday by 15:45 that your order got filled. And even when it got filled, price did not actually start moving until the last sweep of liquidity, which happened on Thursday 12 noon, before price started to print up. Okay, and as you can see now, price actually swept this leg right here. It swept this leg, took the liquidity before printing another bullish candlestick pattern here. So this price action will actually test your patience, because it is not a clean one per se. If you want a clearer one, you can actually go to the Nasdaq futures pairs, or you can go to forex pairs. That is where price will not really consolidate like this, if at all it will, but I'm sure most of the times it will give you at least an opportunity to trade for the day. Okay, so what else are you seeing? Is it not a conviction or a clear representation of what I represented in the last chart? So once price swept this liquidity right here, it gave us another price leg identical to this one that we have right here for the second day. All right, so with that in right here, it is not that difficult. And now price is actually going to try to fill this price leg buy side liquidity, because that is where price will be attempting to draw itself to. All right, so this thing is not actually difficult if you understand that price runs on time, and that you have to come to that particular time of the day before you can do this. You don't have to stress yourself about this. What you have to do is to understand the logic behind this and the reason why you have to come back at these particular times to take your trades. Okay, so today is a Sunday and I'm not going to be trading, but tomorrow morning I'm going to look into this price action that is still unmarked here, and of course my bias is already bullish unless price does otherwise. Okay, I'm still going to repeat this same pattern that I did here. I'm still going to repeat it up front here to mark out my price action leg, to know whether price is actually going to fill up this gold range up here, or whether it is going to sweep price action to the downside. And that is it. So basically this is all about framing your daily trade framework, and it is not difficult to understand. So far you eventually get to understand that price runs on the function of time, and how to make your time align with price by first of all going to the New York market session, by first of all choosing your time trading session as New York, and taking out these simple steps in order to refine your trading. All right, so give yourself a chance. If you doubt that maybe this is a price action that has been framed already, you can actually go into your chart and find it out first before you can judge. So that is basically it for intraday order flow and understanding the daily range for your trades. Okay, you can backtest it and record and know whether it plays out for you and whether it is good to adapt it in your trading. Okay, so that is just what I have for you in this video, and if you enjoyed this video, please consider subscribing to my YouTube channel and turn on your post notifications, and come back for more enlightening video tips like this. And until next time, remain your humble Wall Street resident. Have a nice one.